Plug Power has been one of the worst performing stocks in the market this year. It's down over 50% year to date, and the incoming administration may not be as friendly to renewable energies or alternative energy sources as much as the outgoing administration was. Plug Power is racing to secure the $1.8 billion from the Department of Energy. Hopefully, that happens before the end of this year. But zooming out a little bit, I wanted to provide more of a context in what's going on with Plug Power stock. And so that's what I'll do here in this video. Let's get into the details here.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So in their latest quarterly conference call held in mid-November 2024, the company's management team discussed the political changes, saying that we have been deeply engaged in the development of hydrogen policy with the Biden administration, and we do expect that there will be a change in the political climate. However, they note that the landscape is not completely clear. So they're not thinking that it's only going to be a downside. They're thinking there might be some upside here as well. So for Plug, an important near-term consideration is that they expect guidance on the production tax credit soon, with more favorable terms to accelerate hydrogen projects will be announced prior to the year's end. And that's most likely what's been happening with the outgoing administration in the US. They're trying to roll out these pet projects and give out these fundings before they leave office, before they lose power. They're trying to get all these monies out to the companies that they were hoping to get money to. Plug Power relies significantly on the government. The company's business itself is not sustainable. It's losing so much money on the bottom line. Cash outflows from operations have exploded, and they have a hard time getting new funding. They have to pay higher and higher cost of capital to get money into the business. So the government money would be a huge deal, a huge positive for Plug Power. Longer term, however, they've got to do something to get their business on a more sustainable footing and stop relying on outside investors to give them money and rely more on making sales to generate revenue and profit and cash flow for the business, something they have never been able to do. And so continuing to rely on the government, very risky business model. It's partly why I've had Plug Power stock rated as a sell. For a couple of years now, I've had it rated as a sell, and I last updated that recommendation on November 15th. So I've told investors to avoid this stock. Hopefully you will have heeded those recommendations and not fallen into this trap. So they go on to say that, look, our markets are not only in the United States, in Europe, support for hydrogen remains robust. And the management team later on in this conference call kind of alluded to that fact that if the political climate in the US worsens significantly, then they're going to pivot to a greater focus in Europe and outside markets from the United States. So one good thing for them is that their plants in Georgia and Tennessee are up and running now, as well as a new plant, the joint venture facility in Louisiana, is going to start production in the first quarter of next year. They talked about April of next year. And that's important for them because it lowers their cost of goods. So it helps them achieve better unit economics, still not enough to generate profitability, but better than where they were before. Management team says that Plug is now the largest single deployer of PEM electrolyzers worldwide, and they installed but not yet recognized over 8 megawatts of stationary power systems with Energy Vault. They also said they met with key partners including Galp, with whom they'll be deploying the world's largest electrolyzer system starting in April 2025, with 2 more customers moving forward on a 25 megawatt order. This is the kind of news that Plug Power stock investors should be excited about. Deals with customers, sales to customers, not deals with governments, not deals with investors to give them more money, but working with customers to actually generate sales and cash flow. Now, in previous years, the company hasn't organized their deals effectively. They've basically sold their products at such a low price that they lose a lot of money on the bottom line. but the company didn't want to price their products higher because they were afraid that sales would fall even further, which they have, right? Sales growth has not been great for Plug Power in recent years. So they're in a bit of a tough spot here. The market for their products is not what they would like. It's not strong enough to generate a sustainable business. And so they need to rely on governments and investors to keep giving them money in the hopes that someday in the future, this business can be self sustaining. I'm highly skeptical that will happen, but Plug Power seems to be optimistic about its prospects. So, like I highlighted, they're losing so much money. They need to go to investors almost continuously to get more money. And today, in this meeting, they announced a 200 million convertible deal with Yorkville Capital. And under the terms of this agreement, they're committed to a long position at a conversion price of $2.90. And this investor agreed not to short Plug stock. I don't know why that was an important negotiating aspect of this deal, but Plug Power wanted to secure their commitment to a long position. Now, under this deal, Plug Power is going to pay over 6% interest on the money, plus they're giving up the upside here if the stock price improves to over $2.90 per share. There will be significant dilution of investors when this happens, or if this happens, if the share price gets to $2.90. So in the third quarter, the company reported revenue of $174 million, and they reduced their cash burn by 27% compared to the previous quarter. That's huge, and they need to continue making those kinds of improvements. They laid off a lot of their staff, and they mentioned they will continue doing that. And one other thing they're doing is now with these older contracts that I said earlier that they didn't organize these contracts effectively. So they're losing a lot of money on these sales they made a couple of years ago. And as those deals expire, the new deals that they're creating, they're more focused on unit economics now. As they're approaching desperate situations with their financials, they're no longer securing sales just for the sake of securing sales for bragging rights to say, like, look, we have a deal with Amazon. Look, we have a deal with Walmart, right? Investors are actually looking into the details of those deals and saying, what's the use of a deal with Walmart or Amazon if it's going to lead to so much loss on the bottom line? Make your deals more effective. And if that means you're missing out on a sale, so be it. Miss out on a sale. Don't agree to a sale that's going to lead to massive losses on the bottom line. If that means you need to shrink your business to be smaller, to right size according to the current circumstances, that's what you got to do. You can't keep going on like this, losing all of this money on the bottom line and relying on somebody to rescue you from the outside, investors or governments, whoever. You've got to be able to sustain the business longer term. They're actually taking steps to do that. They made a few strong steps in the latest quarter. Hopefully, they continue moving forward because we do need these sources of alternative energy. We need these companies to be able to stand up on their own. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.